Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning, you're with us here on a fresh new edition of Bazaar Morning Call, a fresh new week, Monday morning, coming out of course, what has been a very tentative and kind of watchful weekend, especially with regards to the tensions between India and Pakistan. I mean, I think that's the number one talking point still, even as we look at what lies ahead. We are, of course, coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Nigel and Surbhi. Guys, hi, good morning.
Hi, good morning, folks. As Mercury keeps climbing here in Mumbai, I think the other watch point really has been, I mean, domestically, that's been the biggest cue in terms of what next, a series of meetings.
Yeah.
But at least there's some calm on global screens. We haven't woken up to another shocker or a bazooka from Mr. Trump, so that's good.
Well, that's right. And April has actually belonged to the Indian markets because we have been outperformers. Last week, we saw some bit of consolidation, but otherwise, we have been the outlier in the month of April itself. And, the next few days, we'll say goodbye to April and let's see what May holds for us.
Well, that famous saying which...
Sell in May and go away.
No, I don't think... I think, it's quite incredible. I was looking at statistics. India is now right at the top.
Yeah.
Even after Friday's fall, right at the top
Yeah.
in terms of large major markets, in
Indeed.
terms of returns. From that Liberation Day,
Yeah.
2nd of April. So let's just sort of take it from the top and, tell our viewers exactly some of those numbers. So India is the best performing Asian market since April 2nd close, which is the Liberation Day close. The market's up 3% from that point. So that is quite something, right? The Nifty is also, by the way, crept back into the positive territory on a year-to-date basis. We're up about 1.7% or so. So these are good numbers to look at. Now, FPIs, and we were sort of looking at that number middle of last week as well. So they've been big buyers. The week before last, there was only 3 sessions. They bought about 15,000 crores. You add up what they did last week as well. So in about 8 sessions, FPIs have bought stock worth about 32,000 crore rupees. That is a very large number we're talking about, which has come back. Of course, as a percentage, if you can move the graphics along, as a percentage of what we've seen over the last many months in terms of what they've sold, this is still small. The big risk, which I think, as I said, markets have been very watchful about, of course, is still the India-Pakistan tensions and how this will go forward. Some have been of this firm view, and if you read editorials in newspapers and, general reporting, etc., that diplomatically, India has kind of done what it wants to do, and now will it take it one step forward? You also are starting to hear commentary from, this morning, last night, I think there was something from the US State Department, we're hearing something from China. So this is, I think, the reason the market sold off so aggressively on Friday. Remember, even on Friday, if you look at the institutional number, that was a big positive. But the market was down about 0.8%. And I think this is essentially the big reason why. And I don't think that kind of goes away. That sort of risk kind of does not go away in that sense. For US as well, right? So India and US had been the 2 best performing markets for a number of years, large markets. So think about it. Last Monday, the big theme which was in vogue was selling US exceptionalism, right? US assets, dollar assets. By Friday, it had completely flipped around. It just tells you the nature of things. So just look at this. S&P 500 by Friday's close was up more than 8% above Monday's low. Just 1 week, Monday to Friday. And I think, US was really the big highlight in that sense. And Friday has not been bad. So Friday, S&P about 3/4 higher, Nasdaq about 1.2 higher. And this week, on 30th, essentially, you'd have 100 days of, President Donald Trump's second term, which comes to an end. So the first 100 days in that sense, and there'll be lots of, already there are a lot of, I think that Time Magazine interview and so many others essentially this week you will see centered around what he's done, what he's been able to achieve and what he's trying to achieve so far. Markets, of course, in terms of clarity on trade talks, still looking for the big one. What is that big one? It sounds kind of bizarre, but markets are looking for clues whether US and China have actually begun to talk. Because last week we were hearing that one side is saying, yes, we've started talking. The other side is saying was essentially denying it. So I think that remains the big one. in that sense. Now, this week, S&P Global PMIs are important. There is some other data as well. For example, this week on Friday, you will get the jobs report, coal piece, but none of those will show the impact of tariffs. What essentially will matter is PMIs, because that is essentially slightly forward-looking, and it's a survey. So, global PMIs in focus. Results, big results from the US. Microsoft, Amazon, Meta, Apple should be in focus as well. And just to sort of come back to our levels and tie in things, India continued the up move. As I was saying, Nifty 0.8 higher last week. Bank Nifty about that much. Mid-cap index was up about 1.7%. So where do we go from here? The upside is pretty clear. For the Nifty, for example, it is a 61.8% retracement, which is about 24,545, 546. But supports, Friday's low becomes important. 23,847 is that number. And below that, the next support comes in at 23,593. For the Nifty Bank, similarly, resistances we put out many times and we've kind of sort of come off those levels. Support comes in, which is the Friday's low, 54,176. And the next support comes in at about 53,735. GIFT Nifty, I think, is indicating a small, not so small as compared to when I saw in the morning, about 115 points higher on the GIFT Nifty this morning. Surabhi.
Absolutely, but I think the funniest part of all this is, are we talking, are we not talking? Because there was more of that on Friday as well, where Trump again made a statement that, no, we're talking and negotiations are on. Yeah. And then the Chinese embassy in the US issued a statement saying we're not talking, there are no trade consultations underway. And somewhere over the weekend, there was also a statement from, I think, Scott Bessent saying that first there'll be some tweaking of tariffs, they'll be lowered, and then the talks will begin. So that's, another level of geopolitical trade bazaar. But anyway, just to come back to cues here, now Asian markets are trading fairly mixed. They started off quite positive. The Japanese market was up almost 1%. But once China started opening up and the Hong Kong market opened up, the colors changed now. So there's a fair bit of caution out there. It's really all eyes on China. Why do I say that? First of all, there's a briefing expected today from the PBOC, from, the top brass of the Chinese establishment, basically. You don't know which particular institution. And it's all eyes on expected additional stimulus measures. And why has this now become center stage for the market? Because the Chinese finance minister issued a statement over the weekend, Lan Fon, saying that China will adopt more proactive macroeconomic policies to promote the realization of growth this year in the country and to continue to bring stability and momentum to the global economy. So China seems to want to play its big role in terms of stabilizing global trade as these tariff negotiations weigh on sentiment. And that's why we're expecting that press briefing. More measures could be detailed soon. On China as well, the good news in terms of the macroeconomic numbers is the industrial profits data that came in. In March, there's a big pickup in industrial profits. The number is up about 2.6% year on year. And it has got the overall first quarter number back into growth territory. The growth is about 0.8% versus the decline seen in January and February, which are anyway Lunar New Year holiday. So that's a seasonal impact. But anyway, industrial profits looking better in China. Now, this Time magazine article, Donald Trump speaking to Time magazine, he's made a couple of interesting points there. He's saying that we would consider it to be a victory for the US if the US can impose anything between 20% to 50% tariffs on its trading partners, all countries around the world, by the end of 1 year. So what he's saying is by the end of negotiations, it'll be a US victory if we can do 20 to 50%, which would still be substantially higher than where tariffs have, of course, been historically. And then he goes back to his favorite, the bond market. Remember, it was everybody said the bond market forced Trump's hands. He quips and he says, and I quote, "The bond market was getting the yips. I wasn't." When he was questioned about the whole, walking back and announcing this 90-day negotiation window. Anyhow, coming to our screens here, the Indian market has continued its upward trajectory, though with the consolidation on Friday. Overall, for the week, we've been flat. And right now, the market is about 8% away from the peak, having become the best performing market in most of the world since Liberation Day. Flows picture still looking very solid, despite a lot of geopolitical concerns here in India. There was net buying, almost 3,000 crores of net buying in the cash market on Friday. Domestic institutions were also on the buy side, and they pumped in about 3,500 crores. This is Friday's data. Important numbers and corporate developments. Two I'll quickly pick out. Of course, Reliance Industries and more analysis coming in. But in a nutshell, the retail business has done really well. There's been the EBITDA for the retail business is up about 15%. There's been some weakness in Jio. The ARPU growth of 2% is not as strong as what the market was anticipating because of lesser working days, and the tariff impact perhaps finally being factored in. The O2C performance is a little behind the curve because of weakness in petchem cracks and transportation fuel cracks. And oil and gas, the exploration and production part of it, has been slightly shy of estimates because of lower production in KG-D6 and maintenance shutdown. So that's Reliance in a nutshell. Numbers are largely stable. I mean, there's nothing very big on the way down, and retail actually is looking better than expected. M&M is the other stock in focus. Big deal. It's finally happened. SML Isuzu has a buyer, and it is Mahindra and Mahindra. And there'll be an open offer as well. First, they buy about 59% equity. Then they launch an open offer at 1,554 rupees per share. So these two become really important stocks in news. And last but not the least, I will definitely not take my eye away from the geopolitical developments here, India, Pakistan, and what the latest is. Last night, the Chief of Defence Staff, General Anil Chauhan, he met Defence Minister Rajnath Singh for a complete briefing on the situation. The Army Chief was in the valley over the weekend as well. The Navy is on high alert. It's been conducting a lot of strikes and test firings over the weekend as well. So high alert. It's a wait and watch. Have to keep our eye on the ball over here as well. Nigel?
Well, a quick comment first on Friday's trading session. That buy on dip did work out. And in fact, you did see that play out in Friday's trade. So I think till that 23,800 odd mark holds out, the bulls will believe that this is still a buy on dips market. Also, the institutional number was quite encouraging. But for the past week itself, the Nifty was a relative underperformer. Though for the month of April, we have been outperformers because from that Liberation Day lows, the Nifty is actually higher by close to around 3%. Though for last week, we were up little under 1%, while the US markets are up 2.5% to around 6% or thereabouts. There has been a bit of consolidation. Some of those technical indicators like the RSI Relative Strength Index, they had gone into the overbought zone. And also some kind of cooling off after the one-way run that we saw. So that could be the reason that India underperformed just for the past week. What did the FIs do? Well, they added some short positions. And I'll view this positively because even at the start of the previous series, we did have the FI shorts were relatively lower. And as the series progressed, they did add some shots into the system and they were not getting follow through on the downside. And because of that, we did see a short covering bounce. So some shots getting added into the system. You have the net short positions at around 62% or thereabouts, relatively shorter in absolute terms, smaller in absolute terms in comparison to what we have seen. But shots getting built into the system, I don't view it very, very negatively. Focusing on the options data then, you have the 24,400 call, 24,500 call. Both of them were fairly active. So that those become crucial resistance zones. While on the downside, that 23,900 put, well, that continues to see some addition. The premium out there is close to around 100 rupees. So that brings us to the levels you're looking at. The recent high, recent low, well, that becomes a bit of a reference point that you're looking at. So the near-term range is quite cut out. That's around 23,800 on the downside, 24,400 on the upside. And these are the recent lows that we have seen, as well as the recent high. So those become reference points that you're looking at. But otherwise, I believe the markets are in a bit of a range. And the RSI out here as well has cooled off to around 61. Moving to the Nifty Bank, that RSI had moved into the overbought zone. It had gone all the way to around 75 or thereabouts. Now that's cooled down to around 67. So it's come below that crucial 70 odd mark. Support, that's closer to Friday's low, which was at around 54,100. Important mark to protect on the downside. While the recent high, around 55,350, well, that's the important mark. I think the Nifty Bank again holds the key because it's seen some bit of cool off from that 56,000 odd mark. And if the bulls need to fight back, this one will have to find its form. Moving to the stocks that I'm looking at for today's trading session, the big deal has been announced. Mahindra & Mahindra has gone ahead and bought SML Isuzu. The stock that I'm looking at is JBM Auto because, on the day that we had broken the story itself, JBM Auto was the one that did see a bit of a run. So let's see whether or not, how this stock moves in today's trading session. Besides those two, I'll keep an eye out on this one. The other stock I'm looking at is Manappuram, because we have, and Muthoot, because Chola, they are going to be foraying into the gold loan business. So Muthoot is the one that I'll be tracking for today's trading session because suddenly you have a big player that's coming into their space. Valuation is not very, very cheap and basically it increases the competitive intensity. So Muthoot is a stock that I'll be looking at for today's trading session. That's the second one. And Reliance, they were speaking about getting quite seriously into the quick commerce business with that 30-minute delivery. So the two stocks that I'll be looking at will be Swiggy as well as Zomato. Both of them will be on my radar because you have a big name that's looking at that important quick commerce space. So we'll keep an eye out on both those two.
All right, Nigel, thank you very much for that. So that's essentially the setup and, of course, names to keep an eye out on as we begin this new session.